So accrual means you keep track of things that liabilities that you're just about to have to pay.
Correct.
And cash is you don't
Right.
do that.
Right. You record the expenses when you actually pay them. The other side to that too, though, is under accrual you track assets as well, like accounts receivable. You invoice a customer, but they haven't paid yet. You have a receivable from them, or if you're a company that's carrying inventory, you record the inventory on the balance sheet.
So how far ahead do you do the accrual? I mean, is it like stuff that you have to pay in 30 days or stuff you have to pay
Immediately. So if you're on the accrual method, it's whatever at a point in time your obligation is. So it could be due the next day, so you accrue it, and then when you pay it, you release the liability.
So if you have like a contract where you're required to pay out like 5 years worth of stuff, that's all going to be on there, like all at once, or?
Depends on the terms of that. If it's a commitment to buy something, you probably don't have a liability until you've actually purchased it, but it's just a commitment, then you wouldn't accrue it at that time. So, but I think that gets a little bit unique. I mean, I've seen situations where companies have long-term contracts to buy things, but they don't accrue the full contract if it's over a longer term or period. So most of the stuff that you'll be dealing with will be accounts payable and accrued liabilities and accrued payroll.
And that'll just be like one payroll cycle.
It could be, but I guess if your cutoff is you pay payroll at each period end at the balance sheet date, you might not have an accrued liability. But if you have employees, you're required to give them some vacation time. You should be accruing that pay throughout, and there's always going to be an accrued liability for vacation for employees.
Okay.
So types of accounts on the balance sheet, I touched upon most of these: cash, accounts receivable, fixed assets. Other assets can be like prepaid assets. You might prepay expenses and record an asset because you haven't released the expense yet. Accounts payable, accrued liabilities, and equity would be all on the balance sheet. Income statement, we touched on that as well. You've got revenue and expenses. Some of these other expenses are a bit more detailed that Rich can get into in terms of the tax treatment, but meals and entertainment will be run through your income statement. You'll be depreciating the assets. Compensation is a big expense for most companies. And stock compensation, which we won't get too far into, but when you grant options, you have to value them and expense them through the income statement.
Is anyone granting options? Have you done that before? Are you familiar with the accounting for it?
Mm-hmm.
Right. It gets pretty complex really quickly.
Well, that's more complicated than it was last time we did it.
Yeah, and no, very few are alike, so that everyone has its own unique qualities to it. So it's very complicated. So we keep on coming back to that because as part of the both audit and tax, that's an area that startups started with.
I think as an early stage startup, that's not a big issue. Most companies don't even account for their options until they're actually ready to get audited. I think what's critical is just track the options, like I said, so you know what's outstanding, who you granted options to. You don't want to dilute too much. You don't want to be giving away too many options to too many folks throughout your startup phase. But again, the message is just keep good records. Some other important items: you got to choose a year end. Most companies are December year ends, but there may be other reasons to choose a non-December year end. But I think most startups are default to December just because it's easier. I think a lot of investors like to have December year ends just because then you don't have to think about what your year end is. It's December. It's the most common year end, but.
Do accountants give price breaks if you choose a year end that's like an awkward time of year?
It depends sometimes.
Sometimes.
When we're providing services to early stage startups, generally there isn't the time pressure to get audit and tax work done, within the busiest time of the year. So you can extend things with your investors and with your tax returns, so you still can get the break on the discounting in the non-busiest time if it's in the April to June time frame. So.
We were hoping for February 29th because it only happens every 4 years.
That's right.
The accountants wouldn't go for it.
Well, you could have a 4-year report. It would be unique, that's for sure. Reconcile your cash. If you don't do it every month, every other month, but, you know, don't wait years before you reconcile it. You do want to, that's very important for companies to track where their cash is going, particularly when you have outside investors coming in. That's what they're going to want to know, is where their money's going to. So having good accounting records on bank reconciliations. We talked about record retention, budgeting and forecasting. I think that's important, you know, during the fundraising and then afterwards. So when you're raising capital, you're going to put forth a business plan, and you're going to have, you know, here's what we've done, and here's what we're going to do, and here's what we think we can do with this business. I think it's important to understand what those forecasts mean and make sure that the non-accountants, non-financial people understand it, because as CEOs and founders, you're going to be expected to know, at least to a certain level, what the numbers mean, and they're going to have to make sense, and that's a whole different topic. But you know, a lot of companies really struggle with getting money because when presenting, they just don't understand the numbers, you know, and they don't, or the numbers don't make sense. You know, your revenue ramp doesn't make sense based on the other inputs that you have. And, investors are pretty savvy; they're going to drill down pretty good on your models if you get to that point. HR, contract management, stock option records, we touched upon that as well. Pretty important aspects there. So, you know, that's very high level accounting overview. Certainly there's more to accounting than just this, but that's the bare basics. Any questions? Rich, dig in.
Well, I do have a question.
Yeah.
So we were just trying to decide on payroll, and so there's Quicken and there's Paychex and ADP, and you know, we were thinking of going with Paychex, but it seemed as though Quicken was cheaper and so on, and the main, we were just wondering if Quicken actually, I mean, if Intuit's, if you know if Intuit's payroll, like it seems like Paychex, you just sort of, they just do everything, you know, you just sort of pay them some money and they just do a bunch of stuff and file everything for you. And we were wondering if Intuit, if you actually have to like know how to use QuickBooks properly and so forth, or are they going to provide the kind of service that, or should we just hire an accounting firm and let an accounting firm do it?
I think the payroll services providers generally do a pretty good job. They do charge, though, and what's important is one, getting paychecks to your employees or to yourself. But it's also important to make all the necessary tax withholdings and tax deposits, and I'll touch on that a bit. I mean, there's a number of them. So, you know, not only are they, you know, withholding, you know, income taxes and Social Security taxes and unemployment taxes, and this tax and that tax, and then they have to submit them, you know, monthly or quarterly, and then at the end of the year, you got to do W-2s and 1099. So it's important to do it right. And I don't know about Quicken, what support they have for you to do it on your own.
Yeah.
Has anyone tried to set up on Quicken?
I just tried to set up on the online, Intuit Online payroll, and I found it super easy.
Oh, yeah?
Okay.
I left the process thinking that Paychex was tricking me.
Oh, yeah.
It wasn't, I mean, you have to like do a little bit of work, but it's nothing like insurmountable.
Are they going to make the tax deposits?
Yeah, they'll do all that, yeah.
Okay.
There's like a $40 a month service, and they can even,
And they file
you'll even
forms
you can
and-
call someone to verify your setup and check to make sure it's accurate.
Okay.
I mean, you know, you have to make your employees file and yourself file a W-2, and then, you know, the ID form, whatever it's called. But
The W-8?
Yeah, the W-8. It's not, I didn't think it was that bad.
And will they they'll prepare the W-2s for you?
They will,
Set
yeah.
up and everything like that?
And it's cheaper than Paychex?
It is.
Yeah. Cool.
It was, I found it on Quora. It used to be a company called PayCycle, I think,
Mm-hmm.
and Intuit bought them.
Okay.
And it was highly reviewed on Quora, so.
Okay.
I guess my comment on that would be it all depends on your appetite for wanting to learn it and do it yourself. And I think the bigger you get, the more people you have, the more time you'll have to spend. So I think at some point, you know, take as much off your plate as you can as you grow, because you don't want to be dealing with that stuff. So at some point, maybe there's a transition, but early on, I think, you know,